everybody, and welcome to Energy 50. It is my pleasure to welcome you to our panel discussion today on LNG, short and long-term outlook. I have the pleasure to welcome Stephen Thompson, Global Head LNG and Natural Gas at Poten and Partners. Welcome, Stephen.
Thank you very much. I appreciate that. It's a pleasure to be here.
Chikako Ishiguro, Senior Analyst, Osaka Gas. Welcome back, Chikako.
Thank you very much for your kind introduction. Thank you.
And with us today on this panel, Patrick McKinnon, Pat, First VP Navitas Assurance Partners. Welcome, Pat.
Thank you.
I'm very happy to have the three of you for this discussion. It's a lot of grounds that we may have to cover. So let us focus on maybe latest market trends, how we see the market going forward, of course, but more importantly, looking at your insights from your perspective, obviously, what you wish to bring today on the panel, things you think are worth sharing. Why don't we start the discussion with you, Stephen? Let's kick off.
Sure, I'm happy to provide a few comments. Really, the theme that I want to stress today is headwinds. You would say that the fundamentals are really bullish for LNG, but then if you sort of lift the cover and look underneath, there's a lot of uncertainty and a lot of contrary factors. And I think those are really worth exploring in the group today. As you said, it's a vast topic, but maybe just I'll touch on a few of them to kind of frame the issue. Probably the one to start with is price volatility. Yeah, it's true, prices have gone up and prices are high, but if you look at the type of movement that the prices have experienced, it's astonishing. It's unprecedented, and it's across the board. You'd focus on TTF and JKM. And, you've had more volatility in a single day than in a year in the period prior to the Ukraine war. But it's not just those markers. If you look at Henry Hub spiked really high. It's come down again since then. But many people would have bet that there was an iron law of Henry Hub, that it was going to stay super low. And you can't count on that anymore. And then there's the whole issue around Brent. That issue is as fundamental as what is Brent. They've changed the composition of Brent naturally as a response to the decline in the fields that they have been using to take the price references. But certainly our view is there's a real risk that Brent will be pulled toward WTI, and that introduces a whole new level of complexity and potential conflict or discussion between the players, and makes it harder to get to decisions that you can use to move ahead and address the fundamental energy needs of the world. On top of that, there's a lot of financial instability, related to inflation, increasing interest rates, the stress on banks in the U.S. How is that going to play out? It's going to make it harder to get the project financing that's required to get these massive investments underway. But clearly, the inflation is having an impact on LNG facilities, and you can see that in a really strong trend toward increasing prices for LNG, less around Henry Hub, which is what it is, and it's indexed so that movement is accommodated. But the fixed components of Henry Hub have increased quite significantly over the past several months, and that's another headwind. So I'll stop there, but I think that creates a context for where we are today.
Well, thank you, Stephen. And it's interesting that you remind us about these headwinds. Uncertainty, as you said, volatility, cost inflation, and you finished with financial instability. And you could have argued, who would have thought that after those last 2 years with such high prices, we would have concluded that the market has gone stronger, not necessarily weaker. So I'm looking forward to hearing more of your perspective on that one. Is the LNG market stronger today than it has been in the past, or not? Okay, let's move on with you, Chikako. I mean, what's on your mind? How do you see these issues playing out and the future for LNG?
Thank you. And I would like to speak from the perspective of the Asian LNG players. And over the past decade, the European gas market and the LNG market have strongly connected. The European gas market played two major roles for the LNG market. First is balancing supply and demand of the LNG market. And the second one is providing the flexibility and liquidity to the LNG market. However, now the LNG market facing, especially for the Asian players, facing major challenges due to the new policy against Russia, and have reduced the pipeline gas volumes. Firstly, Europe buying a large volume of LNG on the spot basis. This has tightened the LNG market, of course, and increasing the price volatility. And some emerging Asian countries are experiencing the 20% drop in demand due to the difficulty in procurement high-priced LNG. And secondly, LNG has changed from the optional energy source to the essential energy source for Europe. Since Europe has to import all the LNG it needs, it is no longer able to offer the flexibility or liquidity to the LNG market. Since Asian domestic market is still rigid and forced to rethink their procurement strategy amid the no liquidity in the LNG market. And also the trading businesses has to change their strategy. And third, Europe is simultaneously accelerating the transition to the net zero society. So no one knows how long Europe will take such a huge amount of LNG. That is uncertainty for the future LNG market development. Thank you very much.
I think, yes, thank you, Chikako. And you rightly bring raise our attention to the role of Europe, whether a balancing market or not any longer, and then if not Europe, which other market, and so on. As well as, of course, future prospects when it comes to limited supply available to other markets. We'll go there. We'll come back here. I mean, we want to, of course, maybe touch base on where we see demand in the future and whether that demand is going to be met in a similar manner as previous demand was met. But let's move on with Pat. Stephen set the scene with these wider challenges in the market, and Chikako, maybe insisted on the role of Europe. Where do you come from? I mean, what's your view on what's going on?
Well, my parochial view stems from looking at a global market, and in just a high level, the future for LNG is very bright. I think it's very much gone from a circumstantial supply, serving those markets that were energy starved, and disposing and getting rid of gas where they didn't have infrastructure locally to absorb it, to where it's actually become essential. So circumstantial to essential, and that's how I see it. The issues and the headwinds that Stephen speaks of, from my perspective, are very much in the infrastructure realm. We have over 300 receipt facilities around the world, and a great many of them are in the wrong place. There's a lot of development that needs to be done, and I think that we're going to struggle a bit with finding courageous capital, if you will, to go out and develop this infrastructure in an uncertain pricing paradigm, right? The basis off Henry Hub is going to change, obviously, globally. And you've had a tremendous pushback on Brent indexing for real reasons. And I think that we have a good, solid, incremental supply capability out of the United States, which is going to stay very stable. So for those infrastructure challenges, I think there's the supply side capability. I'm not quite certain the capital is courageous enough to meet the demand as quickly as it has arisen.
I mean, thank you, Pat. I mean, the infrastructure has always been, as far as I recall, in the last 10, 15 years and maybe more, the issue, I mean, or one of the main issues, really. And whether today is a different infrastructure challenge, I would be happy to hear your views about that. When it comes to financing, when you're asking the question, where are the courageous capital going to come from? Oh, I'm looking forward to that answer, really. But circumstantial to essential. This is what I take away from your introduction, Stephen. What does it do you concur? I mean, is LNG moving to some essential role in the energy mix?
I think LNG plays a very important role in the energy mix. I think it plays an essential long-term role in the energy mix in Asia Pacific in particular. But you've got this paradox and this problem that it plays an essential role in Europe in the short term. And that essential role is one that's very hard to dimension. Europe, it's hard to overemphasize this. Europe got very, very lucky with a warm winter. And the history of the world could be quite different had it been an exceptionally cold winter instead. So we can't dimension this. We can't dimension how long Europe is going to be. And therefore, it's very difficult to envisage just how the transition is going to happen from extemporizing around global events in the short and medium term to having this structural market dynamic that satisfies Asia's requirements in the medium and long term. It's a really interesting moment to be in, but again, it's hard to deal with these risks.
So, I mean, these risks, I mean, who is best placed then to manage them? I mean, we had a traditional way of sharing the risks across the value chain. I mean, do you see any material changes in that respect?
I think there's sort of three categories of players. The first one is the group of players that we refer to as the aggregators, which have a big portfolio of LNG, which specialize in managing risk, which have a great deal of financial strength. And they're stepping up and saying, yeah, we're well placed to do that, and we can make long-term commitments, and we can handle this transition. There's a second players that are really focused on energy security. And they're saying, we need to make sure that we control molecules and we can bring them to our markets when that happens. And that's, for instance, Chinese players are stepping up and doing that strongly. And then there's a third group of players that really is saying, I can't align my stakeholders in a way to make these commitments. So I'm going to rely on others, or I'm going to take the risk, or I'm going to kick the can down the road. And unfortunately, too many players, I think, are falling into that category, and European players are falling into that category as well.
And Chikako, can I call on you maybe to comment on some of the Asian players, maybe the Japanese players? I mean, I would argue that they used to fall in the second category. I mean, those players capable of, taking steps to ensure supply security. But we have, I mean, maybe my perception here, but I have not seen Japanese players in particular so much involved in recent years to in the way they support, they used to support, for example, new liquefaction projects and so on. I mean, what is the current status and what is the current sentiment from Asia and maybe Japanese buyers in particular?
Okay, so we are suffering from the very different business model from the European players and the Asian players. For the European players, I think it's a natural behavior that such a huge amount of LNG by spot basis, because they have a long experience of the liberalized gas market, and they are thinking that the trade is natural, and the price signal is there. However, for the Asian market, it's still rigid. We have a lack of source and a lack of infrastructure, and we cannot buy LNG like European players because we already suffered with the high spot prices, and the demand was shrinking. So.
Sorry to
yes.
interrupt you. You mentioned lack of infrastructure. What do you have in mind? I mean,
and the lack of energy source.
Oh, okay. Supply.
Yes, so yes, supply. So the security, the conscious for the security is becoming increasing. Increasing is important for the Asian buyers. And also some government tried to intervene in the long-term contract in recent years. And for example, in Japanese government went to Qatar and Oman to try to conclude a long-term contract to the LNG industries. So and also the cooperation with domestic players or international players to balance supply and demand is become a very important. So I think it is very different way to the Asian players that's thinking and the European players thinking. So I think the two big demand center will go different ways. So that is very interesting, and maybe it's causing a risk.
Yeah. But let me come back to you. So this courageous capital and this need to provide. I mean, we need new supply, liquidity in the market. How do you see this playing out in the current market?
Well, there's 2 points of view. You're not going to see many corporations want to invest into a declining price market, right? It's antithetical. But I see that there is a great opportunity for a more collaborative approach because people want to hedge their capital bets, right? And as you look at the developing world, it's going to be not that many that want to sign up for 20-year take or pays, which creates a blockade when you're trying to do a $2 billion, LNG production facility or a receipt facility. However, I think the reality of baseload demand will drive activity. That's my opinion. Where there are people, there is demand. And that demand creates a lot of capital development in both infrastructure and supply terms. And I do not believe that will go unanswered. You've got, a robust demand that has been created due to geopolitical circumstances in Europe that didn't exist a number of years ago. It wasn't that long ago where Europe was the disposal market for LNG, right? And I think that now with this new understanding that things really can change, it's going to be a matter of who gets what first. And I believe that will be determined by price certainty. And I think you may see a broader consortium of company types entering the market to handle that infrastructure demand so that the fungibility of LNG globally can increase, right? I don't see us really starved for production so much as I see us starved for distribution. Now, that's my perspective. Stephen may have a different opinion, but I think that we're truly constricted on the ability of LNG to become a baseload commodity around the world by the delivery infrastructure.
Well, and I think you said earlier on that US had still a quite remarkable incremental supply capability. Would you include North America, I mean Canada, as part of this statement, or was it only focused on the US?
No, absolutely. Well, North America actually extends, Canada to Mexico.
Yeah.
But if you think about Canadian supplies, they've been, kind of sucked into either the upper Northeast or the West Coast of the United States for some supply. There are LNG projects in development there that are going to come online that will give them a greater export capability, and they certainly have the production capacity to add volumes, right? But the good news in the North American market is the interconnectivity of the pipeline system will allow gas to flow to those facilities from any region that's connected, and that's most of the two countries. There's large diameter pipe that can get things from A to B. So I believe what you'll see is a broader balance of pricing across North America as time goes on, not only to feed LNG, but to create certainty in baseload supply for our own region, right? I was at dinner the other night, and we were talking about how if you cut 50 feet off the top of the earth between Houston and Corpus Christi, Texas, you could walk there on pipe, right? Because of all that's in the ground. But there's still not, again, what's there is not really necessarily where it needs to be. And I think that's a microcosm of the global circumstance.
Okay. I mean, Stephen, maybe building on, what Pat says, or coming back to your previous points, especially the one regarding financial instability. How do we get this new wave of supply or supply capacity in the market? How do we get it in the market, given the fact that markets prices in particular, will most likely settle to lower levels? Is that going to help or not?
Yeah, there's several issues here. Maybe I'll touch on a few of them. The first one, I sense in Pat's comments that a really strong sense that the fundamentals will prevail in the long term, and I agree with that. But as Keynes famously said, in the long run, we're all dead. And I think there is a tension between the position that the fundamentals prevail and comments like the problem is the downstream infrastructure. The question is, what needs to happen to have the downstream infrastructure come into place? The question is, more broadly, what type of credible commitments can take place with downstream players to make these projects move forward? And some of the issues around getting the infrastructure in place are just if you will, a cross-section around issues of how can we get bankable buyers to sign bankable long-term contracts to get these projects moving forward. And that can happen with certain types of players, the ones I discussed in the previous go-around. But a lot of the future of demand is in Southeast Asia and South Asia, and these are difficult places to get projects off the ground. And often the players who are leading those projects are ones that banks really want to kick the tires before they make project finance commitments to based on their long-term financial contracts and their long-term LNG offtake commitments. So those types of issues, I think, are again providing the headwinds. But I don't want to pick on Southeast Asia or South Asia. I think it's interesting to pick on the IEA, if you will. The IEA puts out numerous scenarios, but sort of the one they like is the net zero by 2050 scenario. And that has the share of natural gas in the global energy mix collapsing to 8% by 2040, not 2050, 2040. And it's sort of saying that's a good thing. That's where we should be heading. So you have this extraordinary phenomenon of an entity whose roots are in energy security that really got underway with the global oil price shocks. That's located in the heart of Europe, whose remit is energy security still, exhorting the world to embrace something where there's no case for long-term investments in gas. Will the IEA's presentation and advocacy, if you will, of the net zero by 2050 scenario prevail? Well, Pat suggests, and I would agree, no. But it's another example of the type of headwinds that the industry is experiencing. And that's going to make handling these issues and dealing with these uncertainties much more difficult.
In terms of business model, Chikako, do you see any potential change here? I mean, why is it that, okay, I understand we have this energy transition. We could not have had this discussion today without mentioning energy transition and some of the scenarios out there, which of course discuss the role of gas in the pathways. But back to the point of financing new infrastructure, new projects, long-term contracts needed, bankable buyers, which are not so many at the end of the day. I mean, without the new business model, can we bring these new capacities, whether liquefaction or receiving capacity in the market?
So in past 10 years or so, the new liquefaction project can start up without long-term contract because there is a European gas market capacity. These projects use the European gas market as a buffer for the lack of to compensate the lack of long-term contract. However, the European LNG demand was fixed and do not work as a buffer. So I think it is very difficult to new supply project can start up without long-term contract. So the good thing is in Asia there's a huge potential gas demand. And I think transition energy will go very, very slow compared with European market. And so the LNG demand will continue to, there is a possibility to continue to grow. And also the pricing, our main pricing is the oil-linked price. However, looking at the future, the volume of US LNG increasing to the 1/3 of the supply. So that means there is no risk, the Henry Hub pricing for Asian market. The previous 10 years ago, we recognized the Henry Hub pricing risk because almost all the volume of contracted volume was oil linked, and the movement of Henry Hub linked price is very different one. So we recognize that was this. But 1/3 of the LNG from the US means 1/3 of the prices should be linked to Henry Hub. That is that we think that the Henry Hub pricing risk is reduced. So the Asia can contract the US LNG volume much easier than before.
Okay. Well, there are so many other topics I wanted to discuss with you, but I can see, in the interest of time, I think we are getting close to having to wrap up. There are a few things, nevertheless, I think I would like you maybe to, if you have this opportunity to touch base on your conclusions. But pricing and long-term perspective on pricing, how this plays out, definition of Brent, which is about to change, and potential impact. But also back to this challenge, because the challenge for this industry is really to get LNG to the market and get LNG and gas contribute to the energy transition global agenda. How do we do this? I mean, question mark. Let's wrap up. Pat, a couple of minutes.
Yeah, I know. I understand, and I'll keep it brief in deference to my colleagues on the call. In short, I think that we need to accept the fact as an industry that it's going to take a great deal more creative approach to financing what needs to be financed to address the market. To hit the market with 20-year take or pays or I go home, I believe those days are over, and or not much is going to get done. So there's a lot of brilliant minds in our industry and in the world that finances our industry. And I believe that there is a long-term recognition that where there are people, there is demand. And therefore, you have an intrinsic long-term delivery contract with the people of those regions. And to facilitate for that will become an economic challenge from a creative perspective. But I do believe that those activities are occurring as we speak, and we'll see them become more and more prevalent as the months and years go by.
Financing innovation, I love it. Okay, Stephen.
Sure. I guess my view is the aggregators, that is the huge global players and strong state players that are either state-owned or backed in a decisive way by their governments, win. And everyone else is going to be pivoting and responding off them. Why is that? It's because the volatility and the uncertainty is not a short-term feature of the market. It's something we're all going to have to live with. And those are the ones who are best placed to take that risk and handle it. And that, for better or worse, I think is the overarching theme in the market structure going forward.
So energy remains for an industry of big boys, big companies.
Exactly.
Yeah. Chikako, maybe a last word to close the discussion.
Okay, so anyway, Asia is now facing the big challenge for the because of the LNG market change. So because we have still rigid market and we have to cooperate each other to cope with such a price volatility and the supply tightening or some other issues.
Thank you very much. Anyway, I would want to maybe share as my closing comment a very bullish, in fact, perspective on the role of LNG and gas in the energy mix as we move forward. I think there is a very bright future coming forward with prices, more manageable prices. I mean, volatility will be there, will stay. But as we displace more and more oil products, I think we will see maybe new ways of financing some of these downstream opportunities, which in turn can hopefully leverage more of the upstream projects we need for this industry. It was a real pleasure to have the three of you on the panel. Thank you very much, Chikako, Pat, and Stephen. And well, let's see how things play out in the coming months. Hopefully, a lot of good news, not just headwinds coming our way. Thank you
very much.
Thank you.